Welcome back to Morning Markets on Monday the 8th of November. An interesting week last week, a number of positive earnings reports and some interesting announcements from central banks. The US Federal Reserve opted to start moderating the pace at which they buy government bonds and agency mortgage-backed securities by some $10 billion and $5 billion each month, but maintaining interest rates. We'll hear more from Jay Powell today. The Bank of England was expected to increase rates, but on the day, the Monetary Policy Committee voted not to go ahead, maintaining rates at their near zero bounds to maintain momentum in economic growth. It's worth just turning first to the bond market, where we saw some of the larger moves. In terms of UK gilts, the 2-year ended the week at 0.39%, 10-year 0.84%, and the 30-year at 1%. In the chart which you can see on screen now, you can see the shape of the UK gilt yield curve over the week. The curve reflects the yield available on the y-axis of government bonds held until different maturities across the x-axis there. For example, a gilt with 10 years to maturity currently offers a yield of 0.84%. The green line, which is the bottom line, is the current yield curve. The yellow line is the yield curve 1 week prior, which is that line on top. Essentially, you can see the yield on shorter maturity bonds has pulled in more aggressively. This is more evident if you look at the bar chart along the bottom there, whilst the long end has also pulled in, but to a lesser extent. US Treasury yields ended the week 2-year 0.43%, 10-year 1.48%, and the 30-year 1.9%. In terms of equities, in general, global equities in sterling terms were very strong over the week. They returned just over 3%. Strongest performing markets being Europe, growth outperforming value as a style by 1% on a global basis. In terms of markets, more specifically on Friday, so the 5th of November, in the UK, the FTSE 100 was up 33 basis points. In the US, the US was positive, up 40 basis points, NASDAQ 0.2%. And in Europe, Europe was up 70 basis points. Across Asia, you had Japan down 0.4% and Asia outside of Japan down around 0.46%. The dollar was slightly weaker on the day, down around 0.1%. You had sterling against the dollar at 134 and sterling against the euro at 116. Looking to the week ahead, you've got US inflation reports for October. They'll be released on Wednesday. The expectation is for a pickup in the rate in general, taking it outside of the Federal Reserve's target band. Hence, the developments around policy last week to maintain growth, but to start to bring controls in to moderate that inflation level. It'll be interesting to see the Michigan Consumer Sentiment Surveys, where we'll see the impact of inflation is having on consumers' appetite to spend in general. At this stage, there is an expectation that the survey data will remain robust. On Thursday here in the UK, we'll get the preliminary estimates of the third quarter GDP growth alongside business investment, trade balance, manufacturing and construction output, where we'll get a better indication of the impact of supply chain delays and higher energy prices on growth. China will be publishing foreign trade and inflation data for October, with markets pointing to a solid rise in exports and imports, as well as steeper increases in both consumer and producer prices, as has been widely discussed. We'll also hear from several of the developing market central banks, where they'll provide policy decisions and forward guidance around growth and inflation dynamics, which will offer us a useful comparison relative to the developed world. Thank you very much for watching. We look forward to bringing you up to date throughout the week here on Morning Markets.
Subscribing to the True Potential YouTube channel is quick and easy. Simply go to the channel on your desktop or through the YouTube app on your phone and click the subscribe button. You can then press the notification bell symbol if you wish to be notified as and when new videos are released. Doing this is a great way to keep yourself updated with market developments and personal finance insights. Thank you to everyone who has subscribed, and we look forward to continuing to help you do more with your money.